All right, family, welcome to another Sunday Fun Day. This is my channel, Dudley Do Right. Also called the American Dream in Real Estate. I am Dudley Do Right. This channel is called the American Dream in Real Estate. And today is November 8th. So as we go over every week, what are you doing to advance your future and your life to push yourself forward? A lot of people have dreams. When 2020 happened, as I'm going to do X, Y, and Z. Have you done that? Have you set out a plan to execute and do the impossible? Do what makes you uncomfortable. That's where change happens. So, as we always say, being too cautious is the greatest risk of all. Make your dreams reality starting now, starting today. Time is the #1 currency, so use it now. And without commitment, you will never start. More importantly, without consistency, you will never finish. So I come to you live every Sunday telling you guys what's going on with Dudley Accounting Services and what's going on with myself. Just living a free life and wanting you guys to do more, to get out there and be active, to do more, stretch your brain, do things that make you uncomfortable. Don't stop doing everything that's similar to you. That's what change happens. So the new focus of today, we are Dudley Accounting Services. We specialize with small business organizations and also real estate investors, helping them save money in taxes. So being that we have 2 months left out of 2020, we want to hit hard with our real estate investors so they get the most information going into tax season, because a lot of people don't know this. So we have an example today to go over 4 scenarios. If you run an Airbnb out of your house, what are you looking at? How to set up your business. If you do rental properties on the side and you have long-term leases, and then you have another property that does Airbnb. So we got an example. We use our famous Bob's Airbnb income. So is Bob's Airbnb income going to be passive? Right. So a lot of people don't know what passive is or active is, so I'll break it down. Passive income is that you make when you don't have to put work in. It's like rental income. You get a property and your tenants pay you rent. It's passive. You don't really have to do. Active income is you actually operating in the business. You actually running the Airbnb. You're cleaning, the linen. You're actively involved in the business. So we're going to go over this Sunday Fun Day today, 4 different scenarios that you have to look for when you're renting out your Airbnb, right? So Bob here has rented out his Airbnb. We went over scenario where Bob W-2 income and 1099 income. So go back to that video and watch that one over. Go over like the W-2 income from 1099 income. In this video, we're going to be talking about these 4 different scenarios. So say Bob has an Airbnb, right? And rents out the Airbnb for less than 14 days out of the year. There's no tax consequence for that. So there's tax-free money. So if you have an Airbnb and you're renting it out, not successful, the pandemic hit, you're not getting people in, you only rented it out for less than 14 days, all of that income you get to keep. Just wipe your hand. You don't have to report it or anything. Scenario 2, scratch it out a little bit. So you rent out the space for 14 days or more. 14 days or more per year. That is your Schedule C. That's passive income. You pay no self-employment tax on this. This is key. That's why you put an asterisk by it. This is key. So this is your long-term rental properties, who have yearly leases, 6-month leases, but it's over 14 days out of the year that you rent out your space. So you pay no self-employment tax. The American Dream in Real Estate, right there, baby. But then you have the 3rd scenario, where you rent out the space for less than 7 days rental period. So say you have a rental period, each person comes And each person stays on average throughout the year less than 7 days. Now you have to go back and report all of this because you are operating, you have tenants coming in and out less than 7 days. You're operating a business which has to go under Schedule C, not Schedule E. So this active business income will get self-employment tax, income tax, state taxes, state and local, all that good stuff that we want to avoid, right? And then we have our fourth scenario where the rental period, your rental period, so the time that you rent your space is at least 7 days, but less than 30 days. So here's the huge nuance with this. If your rental period is over 7 days and less than 30 days, so let's say you rent out the place for over 7 days and you made $100K. Is that income passive, which means it will be on Schedule E, or is that income going to be active, meaning it's going to be on Schedule C? I already have it rented out on the board. So it's a key indicator to whether when Airbnb sends you that 1099 miscellaneous, they put it in other income to decide what you're going to do with that income. They don't tell you how to report that income. They just book it in other income when you're 1099 miscellaneous. So you have either a choice to put it on Schedule E or Schedule C. So say you rent out for more than 7 days, but less than 30 days. So you cannot, and you do not, so say if you not perform substantial services, so services you do not perform those, you get to report your Airbnb income on Schedule E. Substantial services you do provide, meaning substantial services is like maid services, hotel services. And these maid services, hotel services like cleaning up after your tenant, cooking for your tenant, giving them breakfast, giving them lunch. It's all part of your operations. So if you make it all a part of your operations as an Airbnb host, report it on Schedule C. If you get smart and you get tax planning and get EA, or you get with Dudley Accounting Services, we will show you how to outsource your services, maid services, cleaning services, your management crew, stuff like that. So you can report your income on Schedule E. So the golden ticket here is we don't want, as real estate investors, we don't want to employment tax, no self-employment tax. We want them to flow through on our Schedule E. We can do this. It's pretty normal for people who have yearly leases. They don't have self-employment tax. But then you have your Schedule C, run active business, active Airbnb, but they don't know the tax behind this. So I wrote stuff on the board here. So definitely leave questions in the comments below. And I'm going to switch around here. And reach out to me at dudleyaccountingservices.com. The link will be in the description. And that's it. That's all I got for you guys. Next week, we'll go over how to calculate your average rental days per year, right? It's pretty tough calculation, depending on like how much you got going on. I'll see you guys next week. All right, family, peace.